What is up, everybody? We are back. Retail Weekly is back. I'm back from vacation. I'm RonnieV. This is Nick. Just like every week or most weeks, we're going to get into Retail Weekly, what happened this week with big names like UNH, Oscar, Zeda, and D Local. So, real quick overview of what happened this week so far before we get into the nitty gritty. UNH, big news, up 12% today. Last I checked. Let me double check here. Yep, ending 11.98% today, up. So we'll say 12%, $304. Warren Buffett, the Oracle Omaha, was a big buyer, and I think a continued buyer of UNH, fit his wheelhouse. And yeah, big news there, popping the stock up. And I think this could be spell bottom for the name, and they could get their uptrend back up to $500 per share. And then Zeda, kind of had a down week until Friday today, popping back up nicely here, another 6 or 7%. Oscar had a little bit of a down week, but then popped up nicely today with that UNH and Warren Buffett news. And they're actually ending the week up, I think, 2 or 3% on the week. So that's a big win after they have been on a nice climb, about 15 to 20% since their earnings. And then lastly, we have D Local, one of my favorite names I've been calling out a lot. I got to give myself a plug. Man, oh man. Called for a 10% move. Gave you guys a video on the beach talking about how this thing was up 20, 30% after hours. Man, crazy. After being up 6% in the day. What a move. What a week. It's probably been one of my best weeks here in a while, Nick. It really has. And I was on vacation for the whole time. So clearly I need to take my little MacBook Pro and go down to the beach and just chill out there some more to find some more great trades and just to have things work out for me. But how was your week, man?
Oh, it was good. Sorry. Wow. That just got me. Very good. Very good trading. Did well on spreads. Did decent on regular options trades. I have some swings open. But overall, pretty damn good.
Love to hear it, man. Yeah, it was crazy. D Local, I mean, yeah, it was just it was easier to peg, I guess I would say. The biggest thing with D Local is they deal with the emerging markets and they deal with a lot of fees in interchanging between currencies. They deal with a lot of that. So understanding that every so many quarters are going to have like a negative free cash flow, just kind of like a nuke. And it was just consistent. The fourth quarter was consistently that quarter. And then Q1 of the new year, they did really well on free cash flow. And then Q2, they would always do even better, like double that last free cash flow quarter. And both those quarters, they would have a huge spike. And I was actually looking back in some of my older X posts, and I called a D Local. I had a different lotto last year on a D Local call, or the beginning of this year. So it's just a little funny. Hit it twice for 20-30% there. But crazy move there. I mean, they're up a massive, I think, 40% on the week. I still think they're pretty solid valuation wise with conservative assumptions. I still think they're rocking like a 20% margin of safety, even though they're up almost 43% at the end of the week. So yeah, looks really good. How'd you do on stocks this week? Any investments?
So investment wise, I mean, Oscar Zeda came up really nice. Hims obviously, got beaten down. But that news was regurgitated from a year ago, and actually Hims came out with that yesterday that it was.
Yeah, they do that. Those dang pesky analysts, man, they do that.
Yep.
They
Bloomberg came out, tried to regurgitate. Obviously, it did work out a little bit. But I mean, it was, quickly shut down. And obviously, I mean, it went green at one point today. And it just ended a little bit red. That is perfectly fine. Selling cover calls and things has been great. Doing spreads has been great. Again, trading overall, honestly, over the past few months has been phenomenal. So, give or take those days that I am red, hey, it happens. You win, you lose. You got to know that going into the markets, and being able to learn from it. So, again, no complaints here. Shares have been great. So, yep.
Yeah, fully agree. It's ups and downs. Some months will suck. Some months will be the best ever. You just got to roll with the punches. Same thing with the investments. Sometimes they'll be like, man, I keep getting in these names and they keep going lower and lower and lower, and I keep buying them, and like I'm not getting that reward. And we live in a world of people just wanting that instant satisfaction, whether it's with working out or eating right or losing weight or buying into an investment and then it launching like 100%, right? We just all have to realize that this is the long-term game, and you got to be patient. Whether it's trading, whether it's investments, you just got to be patient. But you can kind of see how this game works. We talk about Zeda, we talk about Oscar, we talk about D local, we talk about UNH, we talk about how massively undervalued they are. We talk about these names when everybody else is running for the doors. We talk about these names when everybody else is selling. And what happens? We look like idiots for a little time, but then eventually, what happens? We get a lot of,
You look like a genius.
thank you, Ronnie. Thank you, Nick. You guys are the best. I made so much money this week off D local, off Oscar, off Hims, off Zeda, right?
Mm-hmm.
And we've had back-to-back weeks of just monster callouts. Zeda, massive earnings, ran 20-some%. And we were talking about it live. I even bought live here with Zeda whenever it was only up 3%. And I was like, those earnings were just phenomenal. Phenomenal earnings. I was like, I'm buying right now at 3%. Phenomenal. And then we literally ran 20% plus. We've had a pullback. That's just your basic. It's just your basic pullback, guys. The thing about Zeda is we have to remember that this stock was what, 30, 40 bucks not too long ago, and it had like a 50% dump after earnings and after they had that lawsuit come against them and everything. So you got to realize people are still holding those shares, and most people, when they get half their money back, what do they say? If they're like, if I can just get half my money back, I'll sell. And so you see a massive run up in Zeda, and guess what? Most people that were selling weren't the people buying down low. They were the ones that were actually holding from up high and just saying, okay, I'm good. I got half my money back. I'll call it a day now. But it just gave another buying opportunity on Zeda after phenomenal earnings. D local, phenomenal earnings. Oscar, terrible earnings. But guess what? They kept rising higher after their earnings because people were sitting there saying, oh yeah, this company's growing 30% plus. 30% plus revenue for the year. It's going to be a massive year. And then they're going to get back to profitability next year. So, and then UNH, yeah, I mean, people were calling me stupid for investing in UNH and just like, you're an idiot. This thing's going to 150. This thing's going to $100. This thing's going to go bankrupt. And I was just like, you're crazy. You are crazy to think this moat company, the largest health insurance company in the world, is going to go bankrupt. I'm sorry.
Yeah, I mean, their net income, what, 22 billion, 21 billion? What's their free cash flow? It's also in the billions. I mean, 28
billion.
Yeah, I don't see it dying. Yes, obviously, they may get fines, they may get, something of the sort. But like, this is a pioneer company. This is like a top 10 company in the world when you're looking at multiple different things. It's not just gonna die, like there's nothing earnings wise that's showing it's gonna die either. Like, yeah, you just hear FUD, you see it down 30%, 50%, 60%, and people go, okay, it's going to zero. Yeah, that's how people think. Just like if you do 10 play, let's say I alerted 10 calls or 10 plays. 9 out of 10 won. I would hear more shit about the one loss than I would about the 9 wins.
Yep.
Even if they're up, let's say, 100% on their account, you would hear that more. That's the crazy part. Same thing in that scenario. A stock is down 50%. It's never coming back. It's going to zero. Everyone lost their money. It's a scam, blah, blah, blah.
Yep. It's it's funny because like I have a pretty good memory.
Mhm.
And if you've been watching this show for a little bit of time now, this is our I don't even know how many episodes we're on. I still think we're under 10 episodes. Yeah, 7th or 8th. We almost hit our 10th episode. But I can remember these conversations we've had where we're sitting here talking about we want to be buying when there's blood in the streets. We want to be buying when people are calling us stupid. And we'll know that there's a bottom or a local bottom when people start saying, I'll buy at X exaggerated number. We've seen it with Oscar. We've seen it with UNH now. People said on Oscar, I'll buy it when it's at 5. I'll buy it when it's at 8. I'll buy it when it's at $1. Literally had somebody comment that. And it's just like, okay, we're close to the round. We're close to the bottom.
Yeah.
Because when people start saying that, I don't know why. It's just kind of funny. Psychology, I guess. It's funny because it plays out. With UNH, what were people saying? I'll buy it at 150. I'll buy it at 100. I'll buy it at $50. Good luck. Good luck. Okay, the bottom's probably in, guys. The bottom's probably in. And then what do we know? Boom. The bottom's in. So look, I gotta do it again, guys. We're gonna talk about Zeda in a minute, Wealthmatica. And what's up, man? Good to see you. I love Wealthmatica. He has some really great. I don't know if you've read some of his stuff. He has some really good write-ups on Zeda. Really good Zeda write-ups. But guys, we and I hate to promote this, right? But like $9.99 a month, we opened up. Me and Nick opened up SteadyVest, and I posted this on August 1st. I posted, just bought this UNH Leap for December 2027. So much time. Break even is $306.18. This is an insane deal. Oh wait, what's the break even? Oh wait, what price are we at today? Almost $306. Wow, that's crazy. I think we were back to 400 by then. Well, we're already back at 300. Buying these while the RSI is at the lowest oversold since 2008. This $56.18 now is over $100. It's over $100 per contract. So one contract you would have made over $5,000 in this for $9.99 a month. Not even going to talk about D local and how we called that one out too, but back
also with UNH, I posted this yesterday. Hold on one second. You want to go to the deep dive while you have your screen up?
Yeah.
And you can just pull up that thing that came up that I posted yesterday.
Yeah.
So this is from ValueSense. Okay. I don't know if anyone has used ValueSense. Really good site, by the way. This is where a lot of people get those really nice graphics of, the revenue bubbles and the net income bubbles, the expenses bubbles, all that stuff. So just look at this right here. Okay. This was yesterday. Again, price was $260. Okay. Look at how undervalued it states UNH is at an intrinsic value of $632. And then look at their DCF value of $1,094. In both scenarios here, I mean, it's like a home run. It's crazy to think that a company like this is so undervalued, where we just talked about that. They are literally net income 20 billion plus, free cash flowing 20 billion plus. And what's their revenue? Hundreds of billions. Okay. You're looking at a company that is literally shitting out money.
Literally.
And
400 billion revenue.
Yeah, and you're buying it at what was it? A 60, 70% discount, 50% discount at least.
Yeah.
I mean, again, they're of course, was tailwinds. There, of course, has been things in the healthcare sector, but this is when you want to be buying. Now, David Tepper bought yesterday. Michael Burry bought yesterday. Warren Buffett bought yesterday. There's also other people who bought yesterday. Those are just 3 names that I have, written down right there. There is a reason they're buying, because they're smart investors. I mean, let's just put Buffett. You're getting a guy who knows value, who buys undervalued names, and sees something where in his head he's probably thinking, this is a legit home run. There's no way like he could possibly technically lose on this, in my belief.
Yeah.
With a strong dividend, strong financials, it is way undervalued. I mean, this is like a home run scenario for him. And I know we speculated about this episodes ago. I know many other people have speculated about this, and it came into fruition. That
we called it.
Buffett was going to be buying.
I know we called it on here.
Yeah,
I made a post about it after we did a live, and we called it.
Yeah,
it was literally like, I remember saying something like, imagine if Warren Buffett was buying this stock, and then how everybody and their mother would line up to buy the stock because he bought it. But nothing changed. Nothing changed. The fundamentals didn't change. The only thing that changed was a man that is obviously the GOAT, right? In that this is his bread and butter. Insurance companies, that's Warren Buffett's bread and butter. That's his bread and butter. So yes, you get your stamp of approval. You get the stamp of approval by him buying it. But yeah, Wealthmatic. Yeah, man, I'd love to have you on the live stream, dude. That'd be awesome for you to come on. I know some people can't show their face and stuff because of their jobs. Like there's some people that are financial advisors and different stuff like that, so they can't really do they want to be on X and posting, but they can't be putting themselves out there like that or giving their insights because they're all backed by government stuff. But yeah, if we look at the high five snapshot, we're still 25% undervalued on very conservative assumptions, guys. Very conservative assumptions. So fair value on this is still $408. $408 is the fair value. And we're currently at $304 right now. So you're still going to get a 10% margin of 10% annual CAGR, compound annual growth rate, or 14% annual CAGR on an EPS basis. And again, I want to stomp my foot here on very conservative assumptions. 5 to 6% revenue growth rate, staying stagnant right now at 6% free cash flow margin rate, which guess what? They're doing 6% right now, and they've done higher than 6%. They've almost done up to 7%. So yeah, it's just a terminal fair value of 10 for a moat company. It's crazy. Fair value on zero.
Fair value at?
What's that?
What would you say the fair value was at?
For United Health? Yeah. So I would say not based on super conservative, but I would say base case, like being realistic base case, I'd probably say $500. $499. And this is backed up by, so I'd probably put a 20 PE over here too.
Yeah.
So 442. So between 450 and 500, I would say base case right now. And we're at 304. So, but that's like today. That's today's fair value. That's not next year's or whatever. Like they got some stuff they got to get through. So the stock will stay suppressed, I think. I think we could run to 400 though, short term. I think we could run to 400 by the end of the year just because of what Warren Buffett did with him buying. If his 13F shows next quarter, that this quarter that we're in now, that he was buying more, which I think it will, because that man doesn't just buy one time and then 0.64% of my portfolio. How smart is he though? He bought 0.64% of his portfolio. Imagine if it was like 5%. Imagine how many people would be saying Warren Buffett's an idiot. What an idiot. He bought 5% of UNH at $400, $500, $600 per share. Yeah. But he bought 0.64%. Nothing. Pennies on the dollar.
Yeah.
and now he's probably been building up this. If he bought at 3, 4, 5, 6, he definitely bought, here. So yeah, massively undervalued. I'll just go through all these real quick because getting some comments. Can we do D-Lo, and then we'll do Zeda, and then we'll do Oscar. D-Local after the run, still a 20% margin of safety, $19 fair value on this stock. We're going based on EPS. It's an $18.36 fair value. So you're still looking at 11% or 8% on EPS. But again, even this one is very conservative. They just put up like 40 or 50% revenue growth in this quarter. So yeah, this is also very conservative. I would say fair value today on a base case would be 15 PE there, or terminal fair value, so 25. So between 20 to 25 bucks a share fair value. We're currently at $15.66 after a massive 40% run. So if that doesn't tell you, look, we were just here at 50% margin of safety. And this is why I try telling people. They're like, Wi-Fi snapshot, blah, blah, blah. Like, it's just a bunch of numbers. Like, okay, why were we just here at 50% margin of safety? And now we're sitting at 20% margin of safety? Because fundamentals matter. And eventually the rubber band gets pulled back, but eventually it snaps back, and then you're going to get to the fundamentals. You're going to get to the fair value. And sometimes what you can see, like with a Palantir or some other stocks, the rubber band gets pulled back so far, so undervalued, and then boom, and then you overshoot that fair valuation. The next thing you know, you're super overvalued, which we have that too, right? In the current margin of risk percentage. So if we got up to like punching in bullish numbers in here and got up to like $30 plus, then it's time to like start trimming, obviously. Zeda is still 36% margin of safety. It's a $30 stock. Fair value, it's a $30 stock or more. The reason they're not $30 today is why? Because of the lawsuit. The lawsuit's hanging over their head, and so everybody else is talking all this other FUD about them. They're a $30 plus stock, guys. Like hands down, $30 plus stock. And again, this is conservative numbers. Wondering if D-Lo will pull back first before it flies higher. I mean, it definitely could. But again, you're breaking out of like your all-time lows. And this is why I love companies like this, because I'm buying down here. I'm buying at the absolute lows, and I have all this room up here to run. And, there's some companies that are down here that are very or there's some companies that are down here that are just garbage companies, right? Garbage. But when you get down here and you got a really undervalued company and the fundamentals are screaming it to buy, and the fears and the FUD don't equal it being down that much, you take your shots. You buy in down here because you're going to get massively rewarded. This is a $20 plus stock. The high five snapshot says that, and guess what? Your fundamentals say that too. Yeah. Your cup and handle, your breakout of this downtrend is massive. And I was just teaching a community member about this today. A lot of people think technicals don't matter, and it's silly. It's actually silly, because what you'll see more times than not, you'll see the technicals kind of give you little hints and tell you what's about to happen before it actually happens. Case in point, on D-Local, we have this downtrend, right? We hit once, twice, 3 times, and then what happened here? We literally for weeks, we just kept on consolidating right here. Even you can even say right here, just consolidating right here at the breakout of the downtrend. And then what happens? Big earnings, big God candle, 43%, like that. So absolutely crazy. This thing can keep running. You are running into resistance, obviously. Here's your previous support, turn to resistance. Basically a bunch of support and resistance right here at $17 a share is what I'm seeing. So you're going to run into some resistance at 17. You could pull back, it's not going to be in a straight line, but you still have room up to the red barrier as well.
I see Ben just talked about, do we see a slight pullback after the Buffett news? I would say I do have levels at 294 and 285. I would be a nice buyer at 285 to 294, and I'm looking 2 years out calls, and I'm looking equity to add more.
Yep. Yeah, I mean, the craziest thing about UNH right now is that you have so much room, and even though it ran 12% today, look at the chart. Look at the chart. You're down where you were during COVID. You're where you were during COVID. Not the high of almost $650 per share. Not 400 and some where we consolidated all this time. You're down here at the COVID lows. So
Yep.
you have so much room, and you're still under the 21 EMA. You're still under the 21 EMA. You're still under my high five indicator. We haven't even flipped and made the bullish cross and got our buy signal yet. When we get that buy signal, I'll be buying even more because that really tells us the trend is reversing. But yeah, you're gonna get a pullback. You're gonna get a pullback, probably down to 280, 290, something like that. Somewhere between 280 to 300, I would say.
Yeah.
And then I'll continue higher.
I'm with
And
you.
your lines percentage range is pushing higher. So yeah. And then lastly, Oscar. I mean, I just beat this thing up. No matter what I do, it doesn't not scream the best deal in the market right now. It really doesn't. I mean, it's just crazy. Like, whoops. There we go. There you go. No revenue for the next 10 years. Still should be $28 per share.
How much? 20?
$28 per share if they
Yeah.
if they stayed at 11.88 billion. And guess what? They're already going to be doing 12 billion this year. So what do I know though? This stuff doesn't work. This stuff is dumb. Math is dumb. Math doesn't work with investing. I literally remember the post I made, and I literally said, "Man, a lot of people did not apply themselves in math class in high school, just based off like the UNH numbers and the way people were talking about it."
Yeah.
But yeah, I mean, I don't know, man. I mean, you tell people we give out the free due diligence, we give out the we give it all out. We give out most of it for free. All of it's in our communities, like our buy alerts and stuff like that. But man, I mean, we just give it all out. Like we give tons out for free on X. And all you have to do is read or watch a video. I did a UNH 6-minute breakdown video about how it's undervalued and how we're going to see it, climb back. And it's only been 11%, but it's like 30% off its lows. But hey, yeah, it's crazy, man. It's crazy. But now we need to find the new gem.
Yep. There's always something.
There's always something, man. You know what it is? I think I talked to you about this 2 weekends ago or 2 weeks ago before I went on vacation. Tell me if I'm wrong, but I think I talked to you about the next sector that we see, like the health insurance sector, the big drawdown in is going to be SaaS companies. I think
any
we talked about
key
that.
Ones in particular, or just as a general?
Like your ServiceNow, your Datadog, your Salesforce, your any of those SaaS companies. You know why? Because everybody, or Workday, Monday.com, they're flailing right now because the news is, oh, AI is going to take over all those companies. AI is going to completely take over those SaaS companies, like Adobe, like all those companies, all those SaaS companies that were once rated and priced as if they could do no wrong and you had to pay a high valuation because they were a SaaS company, now are in the pits. Like, if you look across, we pull back up the chart, we'll see CRM, while the market has had this massive run up, where's CRM? Well, CRM's here back on their lows from 2024. Seems like a pretty good buying opportunity to me right there, right? Pretty low. ServiceNow is well off its highs from 2025. Down, bounce back a little bit. Monday.com. I think it's Monday.com absolutely plummeted 30% after they reported earnings, even though they double beat. Why? Because they probably had poor guidance or something in there that it wasn't that great. But they're basically back to their highs of the bear market. So we're always looking for opportunities. There is always opportunities. There is always opportunities in this market. You just have to know where to look. You just have to run towards the fire. That's it. You just run towards the fire. If you run towards the fire, you'll find it. You'll find them. You'll find those companies that nobody wants and everybody's throwing out to the trash bin. Look at Workday. Workday is one of the biggest human resources companies that are integrated in all your mega companies, Amazon, all their workforces. Right, this is how people mostly get paid and how they deal with human resources. It's crazy. What am I looking at? Oh, look at Ronnie. Look at me. I'm barely tan because I'm super white.
Someone wants you to check out OPFI. I saw them post it right when we started as well.
Oh, yeah. This is another gem that I've been talking about. The good thing with companies like this is I was talking about them down here during April lows at like $7 to $10 per share. And now we're sitting at, $10.42. Obviously some people bought in higher. It is what it is. They double beat on earnings. They had really good earnings. They literally ran like 15-20% after earnings. And then they've just kind of faltered out. And if we look at it, they have this huge, nice cup and handle pattern. I could not tell you why they're down. I really couldn't. I'm sure it was something in the earnings that somebody didn't like and they dumped it. But I don't know why it's down as much as it is. But I do know that it's like stupid undervalued. Look at this one. I have a terminal value of 1 in 10 years time, and we're still at $33 fair value. It's crazy. It's crazy. Grab is an inverse head and shoulders. We had this false breakout here. And it was false because we came right back down in, and now we're looking and trying to break out again. Don't know what's going to happen with this one either. I do like it. I do like grab and OpFi though. I still like grab and OpFi. I'm still in grab and OpFi. Are they as big of a position, or am I as confident as I am in as Oscar, Zeda, D local hymns? No, they're not. But they're a gem nevertheless, and eventually things will turn around and they'll reach their fair valuation more than likely. Hitty, I'm actually in this one as a trade. I like this one based on the free cash flow as well, actually. I called this one out a while ago. It's not a gem. It's an MJ name. It's not a gem because it is an MJ name. But yeah, Hitty's fair value is $4 per share, guys. 35% margin of safety. Again, there's an MJ name. Yeah, it could be really, really good. It could be really, really good. There's tons of room to the upside. Yeah, there's your $4 fair value. We're currently sitting at $2.70, and it's only a $215 million market cap. Super, super small, which is crazy. Grab SoFi. Thanks for your insights, my friend. It's very helpful for an investor. Of course, man. Thanks for being here. Make sure we answer everybody's questions. We still didn't talk about Zeda that much. Dang, I want to talk about Zeda more. Zeda's chart looks absolutely amazing. I mean, I know my chart's very busy here, guys, but all you really have to know is that we broke out of this downtrend. We've just been steadily climbing higher, consolidating, and then we had the big earnings pop, and then we had a pullback, retest here, and I think we're going to just continue to rise higher from here. Yeah, looks really good, and like I said, they're still undervalued. Grab $6 stock, 14% margin of safety. Not the greatest in the world, nothing groundbreaking. Where's it at? Zeda. Yeah. Massive undervaluation on Zeda still. So I think once they get that lawsuit out of the way, this name's really gonna run high. It's gonna really run high. SoFi still looks good. I wouldn't be surprised if we get a pullback though, just because you have this really starch heavy resistance right here from 24 to 28. So we'll see. But yeah, you still have measure moves at the 28 and 32.57. Made 1,600 euro profit during Zeta earnings because of you, but I sold it at 20. What's a good buy-in now? Congratulations, man. Awesome job on the gains. Glad to have helped there. And I would say you can go down to a month or daily chart. Oh man, it's tough. You got all these gaps that could fill at any time. You never know when these gaps could fill. Oh, I have the levels. Hold on. Actually, I'll tell you where are we at. There we go. Zeta. Did I not do the levels yet for Zeta? Oh, here it is.
What were you looking at? Sorry, had to do something.
Oh, I'm just answering questions and stuff. He asked me where would you be a buyer of Zeta, because he made 1,600 euro from our call outs. So that's awesome.
I would say, I mean, reality. Yesterday was really good, but
yeah, yesterday was really good.
We were right above the 200 SMA. We were in the middle of the 50 SMA. Now this 1913 level that we currently closed at is a key spot. So if we reject right here, I would look for some downside, but I mean, we've already rejected it just about 3 times now. I don't know if we're going to do it again. Who knows? If you get down to 1824, I think that's a good nibble. If we get back to the 50 or the 200, which is only just under $2 away, I think that's also a good nibble. By the way, Zeda requests to get their class action filed lawsuit dismissed. That was just about 2 days ago.
Let's go.
So I think things are going to start turning there once that gets.
I mean, this 50% drop right here is because of that, basically. Yep. So 50% drop there. We were sitting at $38 per share. This company has only grown revenues. They've only gotten more free cash flow. They've only done better on net income. Mm-hmm. And the High Five snapshot tells you it's a $30 fair value stock. What do you think is going to happen once this lawsuit gets behind them?
Ripper.
Yep. And the chart tells you. I mean, it's a falling wedge. They broke out of this downtrend. They can, again, the charts will always tell you and give you clues to what's about to happen. We consolidated here, running in and smashing down off 16 to 1650. We cannot break through it for week after week after week. I know me and Nick talked about it a lot. We were both getting annoyed. We're like, oh my gosh, this 16 to 1650 level is like a steel-eyed beam. And then what happened? Earnings happened. There was a catalyst, and boom.
Yep.
Boom goes the dynamite, and then we launched higher.
Yeah, I would say the only thing bringing them down is, again, the lawsuit, and honestly, their stock-based compensation. Like, that's what's really actually holding them back from a true net income
They did
profitability.
zero
Yeah.
stock-based compensation for this whole past quarter.
Yeah.
They already slotted out what they're doing for the year, and they're doing buybacks.
Yes, that was a big thing. Yes.
200 million added to buybacks. They still have like 50 million to do more in buyback.
Yep.
And they've been buying back down here. You want to really talk about a company feeling good about its own product and feeling good about itself? Buying back itself down here after a 50% drawdown when your stock's at the lowest point it's been since the beginning of 2024.
Yep.
I mean, you want to talk about confidence? Everybody talks about insider buying and all this stuff. Well, what about the own company being like, no, we're going to keep buying ourselves back, and insiders are buying themselves too. Yep. So yeah, man, it's Zeda's. Oh man, I have it right here. You can wait for these perfect levels, but I'm just telling you right now, if you don't have a position in this name, I wouldn't sit here and say, jump full force in, because we have ran, we've ran almost, basically like 27, 28%, almost 30% in 2 weeks, guys. And then since the bottoms, we've ran, 80%. I get it. Don't chase, don't FOMO. But this is a DCA. This based on my levels from 15 to 23. It's the DCA zone. Figure out how much you want to have invested in Zeda. Figure out your time frame. If it's 6 months, divide 10,000 by 6 months. If it's 12 months, 1 year, divide 10,000 or 5,000 or whatever you want to invest. By that time, in every single month, just put the money in there. And then guess what? If we do get somehow, I don't see how unless we get a bear market, somehow get back down to this buy area below $15 per share. Again, I don't see how unless something catastrophic happens.
Mm-hmm.
Then that's where you're a big buyer. That's where you're sitting there and you're saying, okay, they went down more today. I'm buying 5K. They went down more today. I'm buying 5K. Or, you can DCA that too if you want, just bigger. You can DCA here and then double or triple your DCA down here to get this average of like, $15, which is, I have an average of $15 across a lot of my portfolios. We're at almost 20. I'm doing really good. Trust me. Nobody, like, people in Palantir aren't sitting here saying, oh man, well, I bought at 5 and you bought at 10. You're an idiot. Like, well, the stock's 170. So
yeah.
If you're not invested in it anymore, like me, then you're an idiot. Like me, because I should still be in it, but it's all good. We got massive gains off of it, so you can't own them all forever. Mobileye, this was a name I talked about last year, beginning of this year. I still own Mobileye. I'm still bullish on it for the long term. They're a big player in autonomous vehicles, but I'm not gonna lie, this name has been, it's been one of those names that have just failed to produce, failed to perform. Sometimes you're going to be at a name where it's fundamentally undervalued. Everything looks really good. And then they just continuously, like, they can't get momentum built. They can't keep it going. They just keep, and with Mobileye, they just can't continue to get like good wins. Like, they're not winning a lot of legacy automaker contracts. So again, the good thing about this name is I don't call these things out when we're up here at the highs. I call these things out when we're down here at the lows at, 10, 11, $12 per share. We ran to 20 some bucks. Then we got down here again in April at 11, $12 per share. Then we ran to 20 bucks again. So like people hated on me for Mobileye, Nick. People hated on me for Mobileye.
Oh, I know a lot of people who hated on Mobileye.
But it's hilarious because whenever you're calling a stock at 11, 12, 13 bucks and it runs to 20 some bucks, cough, cough, Oscar, and then people hate on you for it. It's like, what do you want from me? I literally gave you a double in a couple weeks or a month. Like, I can't push the buttons for you. You got to push the buttons yourself. The big red button and the big green button, you got to push those yourself, But I'm happy to put out due diligence and everything. I love this. I love doing this. So, Mobileye, I don't know. It's just in this consolidation between 11 and $20 basically. It's doing what Oscar's doing. It's just in this consolidation. Maybe eventually they get enough wins and momentum and they break out. I'm much more confident that Oscar will break out and do this than Mobileye. Mobileye, day by day, I get less less confident.
Yeah.
Look at this consolidation on Oscar. It's just up and down, up and down, up and down, up and down. And right now, I think we're actually going to go back up to that $20 range. I think we're going to fill that gap. I think we're going to fill this $20.24 gap. Do we break $22.81? Do we break $23? I don't know. But if you want a good trade,
Oscar to get to 20.
What's that?
I would love for Oscar to get to 20.
I know, right?
So bad.
And here's what I was telling a community member this morning. Look at this volume. Okay. Do you see this volume? Do you see this little orange line here, right here?
Yep.
This is your average volume going back 30 candles. So basically, the last 30 days, this is your average volume. Now, what do we see? Whoop. We see that we're well below average volume, right? We are 30% short float. So you're telling me that there is 30% short float. These bears hate Oscar and they want it to go down so they make money. They can't come in here and fill this up and sell this thing down. You know what I'm saying? Like there's all this loose space. There's all this free space to come in here and say red candle, like back here. Look at all these big red candles. That was all a lot of retail sitting here saying, oh God, I need to get out. Right? Because they bought in because of FOMO. So I sit here and I say, okay, we're climbing higher off low volume. That is very, very bullish. That is very bullish because you know what you're going to get if we get any kind of catalyst and you get this volume filling up. If you get all this volume filling up by the bulls, bullish volume filling up this area and a 30% margin or 30% short float, you're going to see a massive move on Oscar. You want to see another company that had a 30% short float and what happened? To see like some kind of indication. Oh, there we go. Wolf, 59% yesterday.
Yeah.
3% today. A total of like 62% total move. Now, guess what? They had a 30% margin of safety as well, and they just ran like 60, 70% in 1 week. You think that can't happen to Oscar? Wolf is a $3.52 billion market cap. Oscar is a $3.43 billion market cap. So you're sitting here, you think we can't run 60 to 70% if shorts get squeezed on Oscar? I'm sorry to tell you, but we definitely can. And that's not why I'm in the stock. I'm not in this as a short squeeze. I'm not sitting here trying to pump Oscar or anything like that. I'm just saying you have to take everything in the room, use it all to your advantage. Right now, what do we know? 30% massive short float on this name. Volume's low. This is a innovative company. It's a very small cap and it's supremely undervalued company. So it can get explosive. What could be the match? We already know what could be the match. The match could be ACA subsidies getting extended. Talks around ACA subsidies heating up. And guess what? Today, we're actually supposed to find out about it, but we're not going to actually find out till next week. That's how the government works. What time is it? 4:52. I think that's a good stopping point. We talked about everything. My voice is going and talking all day. I moved 11,000 shares of Oscar, super bullish. Oh yeah,
give me some of those.
Let's go. There's some bigger bulls than me out there with shares. I think I have about, in total, almost 15,000 shares.
Damn.
That doesn't include leaps and how I can exercise those as well. So yeah, I'm very, very bullish. But what I will say, and like I told my community members today, with Mobileye, the mistake I made with Mobileye, at one point with Mobileye, I was up like $250,000 in gains on Mobileye when I took it from 11 up to 20 some, and I took very small gain. I took very small profits, and that was a big mistake that I made. Because it obviously came all the way back down, and we saw 20 again, and then I learned my lesson. I took gains then, but yeah, it's just like you got to look, guys. Like no one ever went broke taking a profit. If you love a company for the long term, you should definitely hold a decent portion of that for the long term. Take some gains. Take some gains. Delo just ran 42% in a week. You think I wasn't going to sell my August 15th option expiry today for massive gains? You think I wasn't going to sell the September 19th, majority of my September 19th calls for 700% gains? Of course I'm going to sell those. Of course I'm going to sell those. I still hold a massive share position and leaps in Delo and Zeda and Oscar and who else? UNH, obviously. But yeah. Is this going to be recording? Yep, it'll be recorded on. Yeah, you can watch it on X or YouTube. So,
Beautiful.
but cool, guys. Any last words, Nick?
No, I'm just ready for next week. I'll be honest, dude. The last few weeks have been so good. Like,
so good.
It comes
so
to
good.
Friday, and I'm just like shocked it's Friday already. Like, time is really going by.
Yeah, it really is.
Yeah.
I was upset because I had my best week last week, and I was on vacation. So it kind of pulled me away from vacation mode and family time, which I hate that. But it's so tough when this is your passion and like you just love it so much. I mean, you're gonna get pulled away whenever you have like you call out D local to have a big move after earnings and they literally rocket 40% in a day, or you're in a trade like Wolf in the community and it rockets 70% a day because it hit a new deal. You know, it's or UNH is flying. So yeah, it is what it is.
True.
Yeah, I'm excited for next week too. I'm excited. And I don't think we're done. I know there's a lot of bears out there saying that it's over and all this stuff. Look, we can get a 5-10% pullback, of course, but very different than 2021. Very different. Is there some euphoria happening? Sure. But guess what? In 2021, the entire stock market was like massively overvalued. And you had meme coin, you had all this craziness. Guess what? You're not seeing that now. BBAI, they have AI in their name. They just dropped like 30% after their earnings. That wouldn't be happening in 2021. People would find a way to say, "Oh, well, it's AI." You know, like these like people are still saying true to a point on fundamentals. The reason Palantir is so overvalued is because they just keep growing more and more and more and more and more every quarter. Once that stops, then of course, then they're going to have, a pullback, a big one. But yeah, like there's, you know what I'm saying, Nick? Like there's still so many companies out there that are just still like very undervalued. Nike, Estee Lauder, there's a ton of companies that are still just like the whole health sector.
I was looking into hold on, where is it? Estee Lauder's one, but same type of thing, maybe VFC. They were looking to go back to profitability. That was an interesting thing to me. I wanted to check it out a little bit more. There's another one though that I'm looking at my list and I do not see it here. I don't know, but there was one. I gotta find it.
Yeah, even like ETH, even Ethereum, man, like that's ran a lot, but it really hasn't.
Yeah. Yeah,
People
I know.
forget. It's like the markets too, right? Like, sure, we ran 40% from the bottoms, but we're just now at all-time highs. Like, it's been a year and we're like basically at the same level. Like, people forget that. Like, once you break that new level, it typically is a new bull market, and then you see this outlandish move higher, this blow off top, and then you get a pullback.
Yeah.
So, yeah, I think there's still a lot of room to run, and yeah, tons of deals, always deals. But all right, guys, we'll catch you in the next one. Oh, like the video, subscribe, and yeah, we'll catch you guys in the next one.
Sounds good.